Welcome to accounting class. We'll continue with cash flow statement. But before we prepare our cash flow statement, there are some rectification we have to do. And these are the procedures we follow before preparing the cash flow statements. So what are those procedures we go through before preparing the cash statement? As soon as we have our balance sheet, we need to compare the closing balance of the closing items in the balance sheet with the opening balance in the balance sheet before we transfer them into the cash flow statement. So we're going to start with the first step. The first step is identify the change in the net cash and the net debt. How do you find the difference between the net cash and the net debt? The net cash is going to be the closing cash minus the opening cash. So based on the previous information we have, so our closing cash will be cash at bank for the opening and the cash at bank of the closing. So it is closing bank balance minus opening bank balance. And in the previous question, we had the closing bank balance to be 30 and the opening bank balance to be 20. So the difference between the net cash now is 10,000 euros. That's for the closing balance, the net cash balance. Then the net debt. Debt, we have the long-term liability, which is, for the net debt, we have the non-current liabilities, yes. We have 500,000, the closing, minus opening, which is 400,000, and that is on debentures. So that gives us 100,000. So the total cash we have now is 110,000. That is for net cash. Then we have to calculate the change in current assets and current liabilities. For our current assets and current liabilities, we have stock, debtors, and creditors. So change in stock. Change in stock will be closing stock, which is 160,000, minus opening stock, which is 130. So that is 30,000. So our opening stock, our stock has increased by 30,000. And if the stock has increased by 30,000, it brings about a negative impact on the cash. So we're going to treat this as negative. We're going to take it away from the operating profit. Then we have change in debtors. For change in debtors, it will be closing debtors minus opening debtors. The closing debtor is 60,000, the opening debtor is 80,000. That is 20,000. So there's a decrease in debtors, and a decrease in debtor represents an improvement in the cash. So we add it to the operating profit. Then we have changes in stock. Okay. So change in creditors. For change in creditors, we have our closing creditors to be 70,000 and our opening creditors to be 82,000. And the change here is 12,000. So our creditors has increased by 12,000. An increase in debtor will bring about a positive impact in cash. It simply means we did not spend cash because we purchased on credit. So that will be treated as positive. So we add it to the operating profit. Then we have, so I wrote it as stock increase negative impact on cash, debtors increase positive impact on cash, creditors increase positive impact on cash. So our step 3, we calculate the amount paid during the year for taxation, dividend, and interest. All these will be transferred directly to the cash flow statement as either income or expenses anyway, because they are all spent, they are all expenditures. So we'll take it away from our operating profit. So we have taxation, the amount paid is 58,000. Interest, the amount paid. So here we're going to only record the amount paid, which is at the beginning of the year, because that is what is stated in the balance sheet. So the amount paid for taxation, the amount paid on interest, the amount paid on dividends. They are entered directly into the statement of cash flow. Then we have to calculate the fixed assets, which is land and building, including its depreciation. So to calculate the fixed assets, it will be closing cost of assets minus opening cost of assets. Our land and building, the closing cost is 1,500,000, and the opening is 1,720,000. So the value of our asset has decreased. That means depreciated by 220,000. And the depreciation on land and building is 140,000 minus 120,000, which is 18,000. Then we have to calculate changes in the capital structure. A company would inject cash into the business through either loans, which is a long term, or sales of shares, or probably an increase in the nominal value of the shares. So that means we're talking about the ordinary share, the share premium, and debentures. So changes in ordinary shares, the closing minus opening is 60,000. Changes in share premium we don't have previously, so it is 30,000. Changes in debentures, which is 500,000 the closing and 400,000 the opening. So the changes in The changes in capital structure are 60,000 for ordinary shares, share premium remains 30,000, the debenture is 100,000. As soon as we are done now, we will now prepare the statement of cash flow. Thank you.